the last cycle, we have a clear 0 to 1. That is the birth of Ethereum and DeFi being the clear use case of the Ethereum blockchain. Web3 teams just tend to be much more leaner than Web2 teams. I think Aave in their early days up to $1 billion TVL, they only have 5 engineers.
Yeah, it's crazy.
Something like that. That's unheard of in the Web2 world.
Do you think everybody can be an entrepreneur?
If they find things that they are passionate about in the sense that they are willing to fight for it, I would say yes. But obviously it takes courage, conviction, bravery to do so. There are 3 ways to make money. You can make money from money. You can make money from working hard and being intelligent. That's number 2. And number 3, you can make money by taking risks. It's always a combination of these 3 things. And the most successful people are those who just fire all 3 cylinders. If you look at Steve Jobs, if you look at Elon Musk, all 3 cylinders.
Right. Brian, how you doing?
Hey, I'm good. It's great to be here. Been looking forward to it.
You don't often come on podcasts, do you?
It's actually my first time being on a podcast and on a podcast studio.
How do you feel?
It's a little bit claustrophobic, but overall it's good.
You've been a founder yourself for quite some time. You've launched a couple of businesses, and you could say the Web3 space has been really narrative driven.
Mm-hmm.
How do you think about marketing? How do you think about getting your name out there if podcast isn't something that you're used to?
Marketing is definitely different if we compare it in Web 2 compared to Web 3. In Web 3, things that are inherently global, and therefore the projects that you do are inherently on the frontier of what's been happening, right? Which is different from in Web 2. Sometimes you are doing something of just an iteration of the same, or you're being a competitor of another project. Yes, that happens in Web3 as well, but more often than not, in Web3, you have to introduce an entirely new project to an entirely new industry, right? So that presents a specific challenge, right? I think it relates to how you communicate what you're building. How do you package it in a simple way? How do you take analogies, metaphors from the real economy, from TradFi, for example, for DeFi. So that has been a strategy that is relevant and beneficial, specifically for my project. And on top of that, yes, Web3 is inherently global, but there's also a recent trend that I've seen where they try to go to a more grassroots level. So, for example, adjusting the marketing materials to the local language, and therefore penetrating the more grassroots community in each of the countries. We ourselves, we haven't done that, but I've seen projects that's been doing that and were pretty successful at it.
Yeah, that's been our strategy basically.
What is it?
We basically just make content for different regions. Because you have English as the predominant language of business, right? But it's not always easy to penetrate a market that's not English speaking. So we try to make localized content, and it's been okay. It's been quite good. Yeah.
Is this in among Southeast Asia?
Southeast Asia.
Right.
And I think because that's our main focus, but once we go into Europe, once we even go to LATAM, I think it's important to have the local language.
Right. I think in Southeast Asia, given the mass market of Southeast Asia, you cannot assume that the mass market of Southeast Asia understands English. It makes it more important to adjust it to their local language.
So how do you think about that then?
About
how do you are you focused on just the English speaking countries, or how do you sort of segment your target market, given that Copra is in sort of this debt loan space? How do you think about that type of penetration?
Right. I mean, right now we haven't done any local marketing. Our marketing is global. We haven't planned or we're not planning to do any local marketing anytime soon, if ever. So right now we're just focusing on global marketing. We don't really segregate based on region or based on language. Typically, channels that we use just Twitter, Discord. So we're really targeting more of the crypto native audience at the moment. But that said, as I figured quite recently as well, that is not the only crypto audience. People in the like crypto Twitter like to think that they're the only like crypto audience, but in reality there are a lot more other crypto audience outside of crypto Twitter, especially in these emerging market regions that we call grassroots communities.
Yeah. I mean, like, you've grown quite rapidly. You were just telling me like you got 1 million TVL just as of recently. You've grown quite rapidly without that much marketing, like maybe you're more active on Twitter and stuff like that. Like, how did you do that?
For us, we intentionally picked Arbitrum as our first home and marketed specifically to the Arbitrum community, to the Arbitrum depositors, to Arbitrum whales. That's been our go-to-market strategy from day one. And before I go deeper into like the marketing strategies, we pick Arbitrum because Arbitrum is the home of DeFi, at least at the moment. It's where all the DeFi innovations happen at the moment. Arbitrum is where DeFi innovation, the frontier of DeFi innovations being pushed forward. And we always consider ourselves as a innovative project, as a new primitive in DeFi. I think DeFi over the past couple of years, a lot of projects just like reframe of another projects just being going on circles. And to be honest, a lot of people are not just investors, also builders, and I guess the audience as well. It's kind of tired of seeing that. So from day one, we made a promise to us, ourselves, and to everyone that we'll make something that is innovative in the DeFi space. And therefore, we chose Arbitrum as our first home. We got grants from Arbitrum. We got, there's this incentives program for users called LTIPP. So we got those supports from Arbitrum. And that propels us within the Arbitrum ecosystem, which is not small, but I guess in the grand scheme of thing of the crypto space, it is a specific community. So it's easier to, you pick a smaller community and make sure that community knows you and use that as the experiment, as the ground for your experiment, right? So a lot of projects that I've seen innovates and experiment on Arbitrum and then graduates to other chains, graduates to Ethereum.
Right.
Arbitrum right now, I think, has around $1 billion in TVL, while Ethereum has, I don't know the exact number, but something around 100 billion, slightly less than 100 billion. So it's the difference is huge,
yes.
Right? But then Arbitrum has proven to be a good ground for experimentation, and the depositor audience in Arbitrum is also more tolerant towards trying out new DeFi protocols, and that's we're grateful for all the depositors that tried out our app from day one.
Yeah.
Right. Yeah.
Why did you decide to bet on DeFi?
A few reasons. Number one is my background. Before this, I was a founder in the fintech lending space, and I think that shapes me to look at crypto as a financial service, right? And I do believe that not only, unlike fintech, when I see fintech is more like an extension to the current financial system, right? And it's an extension to TradFi.
Right.
Like fintech softwares helps banks, helps the payments, the current payment systems, etc. But when I look at DeFi, I came to realize, not instantly, but through a process, I came to realize that DeFi is not that. It's not an extension of the current financial system. DeFi is a parallel, independent financial system.
Right.
That might not be the financial system now, but the hope is it will be the financial system in the future, right? Replacing the old TradFi financial system. So I think that's also maybe it's an idealistic dream, but it's something that I take pride in to be able to hopefully contribute to the future of this new financial system. Yeah, and that's the first reason. The second reason is that so far, I think DeFi, on the application layer, DeFi is perhaps the only use case of crypto that on the application layer that has product market fit, that has clear product market fit, right? But again, as I've said previously, many of DeFi projects just run in circles. Just a reframe of another previous projects. So I think the question is, how do we push the boundary, the frontier, even further, right? Breaking away from just the common models that we have.
Right. How do we do that?
How do you do that? For us, the approach was that going back to the model where we believe DeFi is an entirely new financial system in parallel with TradFi. We do believe that every single primitive that exists in TradFi will eventually exist in DeFi as well, right? So, and sometimes we got to be careful not to create something that is skeuomorphic, term.
Right.
It's
what do you mean by skeuomorphic?
You cannot really just take something from TradFi and somewhat kind of connect the pipelines,
right,
and connect the pipes to connect it to DeFi. I think we really have to think from first principle, like why, for example, we're in the fixed income space, right? We're essentially taking the fixed income primitive from TradFi, and we're building that in DeFi. Right? So we have to go much deeper than just looking at what are the fixed income products in TradFi and translate to DeFi. We have to go to like why, for example, psychologically, why do people love fixed income in TradFi? Right? And the fact that the equity market is 100 trillion and the fixed income market is 3 times larger than that. The fixed income market is 300 trillion globally. It speaks to how inherently human nature, we want something that's certain, right? Rather than having to be exposed with uncertainty of, maybe I pay you 10%, maybe I pay you 30%, I don't know. Rather than that, we would rather, okay, I'll pay you 12% fixed this year, right? There's something about that appeals to human nature.
Certainty of the future.
Yeah, the certainty of the future. And I think that is we have to go to that fundamental level and then go to DeFi and then think, how do we create a similar product? Not a similar product. How do we translate that and build from that principle up in DeFi? Yeah.
Right. Is there a difference between running a Web2 business and running a Web3 business?
A lot of differences. I can talk about a couple of them, and I'll ask you the same question after. First is, I think from the tech side, I don't think a lot of people realize, but building the tech stack in Web3, in some ways, is actually simpler than Web2. Why? Because in Web3, after we build the smart contracts, it's being deployed to, let's say, the Ethereum network. You can think about the Ethereum network as, in this example, as just one big computer, one big server, right? You can just deploy that. And then, for example, if you want to if your contracts wants to communicate to another project's contract, by default you can it can just communicate. While in Web 2, if you deploy an application and your application wants to communicate to another application, you have to go through a lot of API calls. I have some technical background like REST API. So it's not as simple as in Web3, because in Web3 everything is in one computer. It's in one server, right? That's one. And secondly, in Web2, you have to handle things like the server itself where you deploy. Yes, you might deploy to like AWS, but that itself needs some management. You need to have database that you manage. In Web3, if we talk about just purely the contract level itself, there's no database, there's no server. Ethereum is the server, right? You can just, the only layer on the contract level is that you need to manage is the contract itself.
Right.
That's it. And it's fully scalable. You don't need to increase your capacity on the AWS. Like Ethereum scales by itself. So in that way, it's actually more simple. Obviously, there are ways that they are more complex, for example, in terms of security. It has, every Web3 project has to emphasize on their smart contract security, right? And that's not a simple thing to do. In fact, it's a very hard thing to do. And that's one thing I can think of as the difference. Yeah. And somehow maybe related to that, Web3 teams just tend to be much more leaner than Web2 teams.
Yeah.
I think Aave in their like early days up to like $1 billion TVL, they only have like 5 engineers.
Yeah, it's crazy.
Something like that. That's unheard of in the Web2 world, right? But how about you? What do you think are the main differences?
Well, I mean, like, I think you make a very good point on the technology layer and how they connect. Predominantly, our team at Xellar is probably about like 80% engineers. So tech is a hyper focus. But I would say just like as running a business in general, there's 2 things that really stand out to me about crypto, which is one, everybody wants to connect. It just seems like regardless of whether you're building a compatible product or even a competing product, you want to connect with each other. Maybe at the background you don't want to connect, but up front, like everybody is very community based.
Yeah.
And the second thing is just like the rate at which things change in the Web3 space is very quick. Just like, I feel like we've built 5 years worth of products that's come out in the last 2 years, which, I mean, in some things, in some way, just speaks to how the level of technical capability you need to have to like sort of win in the Web3 space, but also the fact that things just move so quickly, right? And I mean, like, I'm curious because DeFi was something that was in, like, the last cycle, it was like a major thing, right? Like we were speaking before and you said it was the 0 to 1. But how do you think, like, DeFi will propel us through, like, the next coming years? Like, people start to say, hey, like, because institutions are now in, Bitcoin no longer has a cycle, there's, like, changes to the crypto landscape. I'm talking to some people and they say, hey, the cycle's already passed. And then there's another train of thought, which is like, it hasn't passed at all. Well, how are you thinking about that as a founder who's betting big on this space?
On the cycle itself, I have no way to predict where we are on the cycle, obviously. But something I can say is that on the last cycle, we have a clear 0 to 1, right? And that's DeFi. That is the birth of Ethereum, and DeFi being the clear use case of the Ethereum blockchain, right? So last cycle we had no issue attracting all investors up all the way to the retail levels, or not, I should say investor, I should say participants all the way to the retail level to participate in this on-chain economy, right? Because the use case is very clear. It's a clear 0 to 1. But when we see the current cycle, the cycle that we're in, it's hard to see what is that 0 to 1. What is the new 0 to 1, right? And yes, we have crypto AI narrative. We have all of the L2, the 1,000th L2s that we have.
The super chain.
Yeah, and it's not clear where's that new 0 to 1, right? So I think that's I'm not saying every cycle we need to have a 0 to 1, but I'm just comparing this cycle with the last cycle, right? And I think the cycle, because of that, perhaps the force from the retail level is not as strong as the last cycle. And therefore, the result, as we've seen, if this is the end of the cycle, I said if, then it's not as strong of a cycle if we compare it to the start of cycle. Yeah, that's my view on the cycle itself.
Are you investing in crypto?
Of course.
So you still believe the cycle will keep going then?
I take a long-term view.
Okay.
As an investor and as a founder as well in crypto. So no matter where we are in the cycle, which again I don't know, I still, invest my money where my mouth is, and invest my time and commitment where my mouth is as well. How about you? Are you still holding on to your bags?
I'm still holding on to my bags.
100%.
A good amount.
A good amount. That's it. It's good to take. It's good to take profit along the way.
Yeah.
Yeah.
I mean, we just had a recent crash, right?
Yeah.
Which was, it was interesting. I mean, like, what's your thoughts? Because you're in the dev space, right?
Yeah.
So, like, how do you think about it?
I think the surprising thing is, not the surprising thing, but for me, a majority of my holding is ETH.
Right.
I guess, unfortunately, for the last mini crash.
Right.
But I do know that I take a long-term view on ETH.
Yep.
And I forgot this is mentioned somewhere in some podcast, but I don't know where. But why ETH might face a lot of sell pressure is because it's over-owned by crypto natives.
Mm-hmm.
So crypto natives tends to own ETH rather than BTC and rather than other altcoins. So the only way, if we just go back to supply and demand, Econ 101, supply, demand, and price, the only way ETH price can go up if there's new inflow from external sources, right? So we were hoping the ETH ETF would do that. But I haven't checked the performance of the ETF, but it seems like it's not pushing in that direction that much, right? So that's ETH. But again, I take a long-term view of ETH, and I do believe ETH has that strong position as the place where the deepest liquidity.
So then what do you think about like these other chains like Sway that are trying to take market share from ETH? You think they won't work?
I don't think I know enough to the very deep technical level on each of them. I do see Solana as a very high performance layer, obviously. And I do see people transacting more on Solana. I mean, we've seen that.
Yeah.
Not that we'll see, but we've seen that people trade more, like, for example, meme coins on Solana because of that property. But I don't think deep liquidity will go away from ETH in a big way anytime soon. That's my view. Because there's a reason, I mean, the blockchain trilemma, right?
Right.
There's a reason why ETH is expensive and slow, and it's because they prioritize on, if I'm not mistaken on the trilemma, they prioritize on security and decentralization.
Yeah.
Right. So if you're a whale that has $1 billion, right, your most important, if you want to put that on a blockchain, the most important thing for you is to make sure it's safe.
Yeah.
Right. To make sure it's decentralized enough, it's safe enough. So that's where ETH comes in. At the end of the day, these blockchains, they will have their own, use cases, right? It's their specific USP, and I think for Ethereum, it's the home of deep liquidity.
Right. How you came to be a founder, and like why specifically Web3, right? Because I mean, like, I feel like you got to either really want quick returns or a bit crazy to be in Web3.
For me, from my personal standpoint, a few reasons. Number one is, I think in my previous ventures, compared to my previous ventures, I think this represents a global market, which means it's a large opportunity. I don't think people have that many opportunities in their lifetime to start a company. At max, probably max probably 4 or 5 companies in their lifetime, because each company takes many years, right? So I think part of my motto this time around is go big or go home. And I think Web3 just fit into that, being totally global, and I like also being on the edge of technology, right? I think traditionally that would mean being the edge of technology traditionally means you have to build a startup in the US or maybe in China, right? Because that's where the edge of technology is. If you build a startup that is on the edge, the frontier of technology in other areas of the world, especially in emerging markets, it's really hard to find investments, find users, etc. Right? The startups on these other parts of the world in Web 2 typically are I won't say copycat, but it's it's like that waterfall. What's built in the US will then build in China, will then build in India, will then build in Indonesia and other parts of the world. So it's more towards I think the term is more it's more globalization, right? Filling in the vacuum in other geographies of the world, and therefore these are not frontier technologies inherently if you build. So I think Web3 represents an opportunity where you can build literally at the frontier technology, and the opportunity is more democratic, right? You don't have to be in the US to build this. Anyone in the world, it's a totally borderless system, right? But that said, unfortunately not many entrepreneurs around the world outside of the US has the belief, has the courage, has the conviction to build a totally global product, right? And I think that is something that we hope to see more.
Why do you think that's the case?
Why not?
Why do you think that emerging markets don't believe in themselves?
No, I didn't say that. I didn't say. What I'm saying is that sometimes when even the reverse might be true, right? If you're in, let's say, if you're born in a city in Europe, for example, but it's so developed, the city is so developed that you spend your whole life there, and you can just complete essentially your life there when you're born and you die there, then it creates a mindset that is kind of enclosed, right, within that loop. And I think just me, but you as well, we're fortunate enough to see quite a number of parts of the world, right, and see kind of that spectrum, how it looks like, and kind of have the feel of how big the world is. Right? But I think that's not something to be taken for granted. And even those not in developed countries, a lot of people are still on that, as if the world is their city, right? And I think that is the mindset that a lot of people can struggle to get out of, right? Again, I'm not seeing anything. If anything, people from emerging markets might have a more wider view of the world, right? Because if you're in a developed country, then there's not much reason really to look at the emerging markets, right? Because you have everything there. You want to build business, you have your customers, you have everything there really. But if you're emerging market, you're kind of if you want to push yourself forward to the maximum, most of the time you have to look further than just where you live, right? And I think that's probably an advantage of people from emerging markets as well.
Right.
Yeah. What do you think? I don't know if you agree with that.
Well, I mean, I think that there is a barrier to what at least like the outside world believes of entrepreneurs in emerging markets. I mean, I think like VCs would invest in American companies. American companies may not necessarily invest in emerging market companies. That's how I see sort of like the spectrum. And I think that in some senses has a bit of a toll on entrepreneurs because they will start to think that actually then therefore I should only focus locally, which is why I think that there is a limitation to the number of entrepreneurs who are building in emerging markets because they have the mindset of
like Web3 entrepreneurs.
Yeah, Web3 entrepreneurs. I think like they think too locally. And I think like you have to be a very specific type of person to want to build something globally in the Web3 space, right? But you're from a emerging market, which would probably be a factor of like where you traveled, like the type of experience you've had outside, the examples that you surround yourself with. And actually like that's one of the most common feedbacks that I get. I don't know about you, but I get this common feedback, which is I'm surprised that you're brave enough to go and tackle the global space rather than just tackling something local. It's quite rare.
Same.
So how do you I mean, like, it's kind of like, it feels good in some sense because you're different, but it's also,
like of course it's there's some frightening aspect of that. I can share a bit of my kind of journey transitioning from Web2 to Web3 as a founder. It feels like landing into a new country, an entirely new country. I mean, crypto is a country. That's how I think about it in my head. It's just invisible. So it's like landing into a new country where you don't know anyone. You don't know how the political system works. You don't know how the economic system works here. You've built businesses before in your origin country, but when you land here, I mean, the goal when you land to this new country is you have to build a business, and you've built a business before in your origin country. So you have to really take literally the essence of building a business, the essence of entrepreneurship, and how do you apply it to this new country where everything is different. Everything else is different, right? You don't even know how to, like, where to buy groceries, for example. So it's about getting to know the people. It's about getting to know the culture. It's about getting to know what do customers want in this new country. And I literally think about myself as like an immigrant into this new country, right? And I think it takes a certain willingness to go back to zero in that sense, to relearn, to like throw away things that's just not applicable, and really filter out the things that I know and I learned from the Web2 space and apply it to Web3. So it's not, I won't say it's a pleasant experience. Obviously, it's a bit frightening, as you said. But I think when you find something that is that you're passionate about, which I do believe it's one of the most important thing an entrepreneur should do, is to work on something that they like, that they're passionate about. Then everything, it'll propel you forward through the ups and the downs, right? And at the end of the day, no matter what businesses you build and no matter in what space, there's always a challenge to it. It's just different challenges, right? Yeah, so I think it's about accepting that there's just no easy way to build a business and figuring out what kind of challenge you're willing to take and figuring out what kind of space you're passionate about.
Do you think everybody can be an entrepreneur?
If they find things that they are passionate about in a sense that they're willing to fight for it, I would say yes. But obviously it takes courage, conviction, bravery to do so. I think many people whom I met, I mean, there's obviously the glorious aspect that people wish about as an entrepreneur. But just like many things in life, it's a double-edged sword, right? It's two sides of the coin. You have to take both, not only that potential, but also the risk, the pain, the stress along the way. And I think a lot of people talk about risk, like taking risk, but many people don't really comprehend what that means. Taking risk means literally, worrying. Like you will worry, which is essentially pain. Whenever there's problem, which is almost every day, right? And I think that's just the price an entrepreneur should pay. That's why a lot of entrepreneurs, when they're after their business, so like Jensen Huang of NVIDIA was asked, right? Would you start NVIDIA if you were to start again? And he said no. It's just not worth the pain. So I guess there's that, when we're young, there's that kind of naiveness of not knowing what is really ahead. And I had that as well before. I knew it's hard, but I didn't know it would be that hard, right? And I think that's something that people should keep as long as possible in their entrepreneur journey, that naiveness. It's something like lying to yourself, but I mean, if it works, it works, right?
Right.
How about you? What propels you forward as an entrepreneur? What keeps you going?
Not to sound like a Gen Alpha, but probably trauma. No, I think just to answer my own question, I don't think everybody can be an entrepreneur. I just personally don't think. I think there is a glorified ideal or identity that comes with being an entrepreneur, but I think unless you are hyper risk taker, you have the resilience. I think there would be a lot of people who would try to be an entrepreneur and recognize that it's not for them. I think that's the case. But what propels me forward is more what I say comes from what I saw in my childhood, just examples of potential of what could be and I think there's the Diary of the CEO, the host of the Diary of the CEO has this saying, which is people are dragged or they are driven, meaning that either you from your childhood have been dragged, like you've had a childhood trauma, you've had something that's happened in your childhood that has dragged you to be the person that you are, or on the opposite spectrum, you have been inspired to be something, right? And I think like when we take a look at, like for example, Elon Musk, right? Elon Musk's story is clear that he's been dragged because he's had an abusive father. Whereas someone like Steve Jobs, who recognizes that his foster parents are inspiring and the reason for his success is been driven.
He made to believe that he's special.
He's made.
I mean, he is.
Yes. I mean, yeah. But I mean, is that belief?
Yeah. But both became entrepreneurs, successful entrepreneurs.
So I mean, like, I don't think there is a difference between that, but I think like there is a self-looping narrative you tell yourself, and I mean, like, I'm curious because, you know, you talked about Jensen Huang, who basically wouldn't have started at NVIDIA when he was asked, but
knowing everything.
Yeah, knowing everything. But this is your third time. Like, why?
Maybe because I think on a personal level, I can still take the risk. I have this like framework of I'm not saying my goal is to make money, but if the goal is to make money, there are 3 ways to make money. You can make money from money. You can make money from working hard and being intelligent. That's number 2. And number 3, you can make money by taking risk. It's always a combination of these 3 things. So for example, if you rob a bank, there's some effort, but mostly risk. If you just put your money on the savings account, you're just making money with money, no effort, just very slight risk. If you work as a pure professional, then you're just using your hard work and intelligence, no risk, no money you put in. So it's always combinations of these 3. And the most successful people are those who just fire all 3 cylinders. If you look at Steve Jobs, if you look at Elon Musk, all 3 cylinders.
Right. Right.
Elon Musk put a huge amount of his own money from his previous ventures into his new venture. He's incredibly hardworking, incredibly smart, and he takes a lot of risk. Same with Steve Jobs as well. If I'm not mistaken, Steve Jobs became very wealthy, became a billionaire from Pixar, right? Not from Apple after he got removed from the company. And he put a majority chunk of his money on Pixar, right? And obviously he takes a lot of risk, and he's hardworking and he's intelligent. So all 3 cylinders fired. So the question is about how much risk you can take and push that to I won't say to the brink, but as far as you can, in a healthy manner, right? So I think that's the framework that I have, and that's the framework that I'm applying my decision with. Yeah. How about you? What made you decide? What's the thinking process?
I think I'm just a very risk-taking person.
Yeah.
Yeah, I think I'm just a very
like any risk.
Calculated risk.
Yeah.
I think calculated risk is important, but I think
because the way I see it is sorry to cut you, but it's more of a spectrum.
Right.
There are entrepreneurs who are, within entrepreneurs who are risk takers.
Yep.
Still, there's a spectrum.
Yes.
Those who take more risk than others. Right? I mean, you can argue that SPF takes
a tremendous amount of risk.
Tremendous amount of risk.
Yes, exactly.
So that's just a thought.
I mean, I think my life philosophy is that I'm curious to the point that I want to see on what's on the other side of most things, and that often comes with risk. So I've recently come to understand that my own self-philosophy is more of an explorer. I want to explore things, and it's not just explore the world, but explore what it's like to be in a room that's doing a $100 billion deal, for example.
Is this like a test? Is this like an MBTI test?
No, I just discovered it from my own self-reflection.
Okay. Got it.
Yeah. but it's and I think it just comes with the life philosophy of what I think I would want to spend my time doing and enjoy doing. And so I think I wouldn't have it any other way. Which, I mean, it comes to, like, even if I were to earn a tremendous amount of money, I would probably take that into my next venture. I probably wouldn't. I probably wouldn't like downsize the risk. I'd probably be curious to go see what I can go beyond.
This might sidetrack a little bit, but I once read this book, which is recommended by Andrew Huberman, called Dopamination. Dopamination is by a Stanford professor, Anna Lemke. It's a really good book. It's probably one of the best, if not the best book I've read. It also explains, the book essentially explains, I mean, not directly, but indirectly explains why people can be addicted to taking risk. The TLDR is that with risk comes pain, right? That's literally the definition of risk. And if you are, once you're off the hook or you get the results of your risk taking, then it becomes a very satisfying, it becomes a dopamine shot from there. And because of that, people are addicted to the cycle. In other words, people are addicted to the pain that risk gives. So that's one of the explanation of, why entrepreneurs cannot stop being entrepreneurs, or at least take the same amount of risk, right? But yeah, I mean, I can talk like hours on that, but that's a TLDR. Yeah. People should read the book. It's Dopamination by Anna Lemke.
Yeah. So I mean, just to close off the podcast, if you had maybe like some advice for entrepreneurs who want to become an entrepreneur or want to get into Web3 space, any advice?
I do have quite a number of them. I think just speaking generally, not just in Web3. I mean, a lot of these people have to really learn when they actually are an entrepreneur. But like, for example, the earliest lesson that I learned, number one as an entrepreneur, is don't build sophisticated, cool products that nobody wants. I think first-time entrepreneurs tend to, look at the most successful companies and see how cool their product is. OpenAI, Tesla, Apple. But even if they go through the history of that company, like Tesla, they started with a simple car, right? It's not like cool at all. It's not sophisticated at all. It's, if anything, they just stick things, all components together and make it work, right? So don't start a company on the basis of wanting to just simply build cool products. Right? Build something that people want. Well, that's YC slogan, right? But it's true. It's true. Build something that have a market. Be on that intersection between product and market. Right? If you put great teams on a bad market, it will never work. If you put bad teams on a good market, it could still work. It could still work. So the market always wins at the end of the day. That's one of my earliest learnings as an entrepreneur. And number two, as I've said, build something that you're passionate about. Build something where your curiosity and interest takes you. Pick a field like as wide as possible that you're passionate about. But within that field, don't be picky on what exactly your company would look like, because again, the market always wins. So your mindset should be, okay, I'm interested in, like, for me right now, I want to be in DeFi. I want to tackle something related to fixed income. Okay, so that's where I'm passionate about. But how the product looks like, you have to navigate through the market, and the market will essentially tell you what to build within that space. Right, so be stubborn on I think Jeff Bezos said this, be stubborn on your vision, but be flexible how you get there, right? And going back to why passion is important is because, well, when everything is going well, yeah, I mean, I heard people say don't follow your passion, right? Which I don't agree. The thing is that if you don't follow your passion, yes, you might be driven when things are going well, right? When things are going well, everyone's different. Everyone's is driven. Things are good, you know, everything is flowery. But you have to really consider when things are not going well, which in the case of startup, that's like 85% or 90% of the time. So what is it? The thing that's not rational, actually, what's the irrational thing that will still push you forward? And that has to be your unexplainable affinity to whatever that is you're working on, right? And also don't take it to the very extreme as well. Sometimes I see entrepreneurs where I want to do this exact thing, where there's just no market for it, right?
Yeah.
You have to be quite flexible within that space. Yeah, I would say those two things.
Brian, thank you.
Thank you so much, Daniel. It's great to be here.
Thank you.